What's going on, traders? Sorry about that. A little bit late to the tape here, seeing the action that's going on out there. I'm here trying to bring you guys all the information. I got a ton of headlines to get into today. Today, we're going to talk about oil dropping, the Jolts job openings, ISM services, Voyager Digital, Rivian, Carvana, and of course, we got our two experts. That's what it's all about here on Stock Market Movers, is getting to the expert opinions that you guys want to hear. So stay tuned. We got a great show for you today. We got Peter Tanis, founder and chairman of Lynx Investment Advisory. We got Ivan Feinseth, analyst at Tigress Financial Research. That's going to be at 1:15 and 1:45. So stay tuned for that. We got another great show for you right here on Stock Market Movers with none other than Money Mitch. Let's get it started.
It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.
All right, traders, it's another time for Stock Market Movers, where we give you the headlines and get to the experts. Let's go ahead. Let's type on in. And yes, easy. I see you. You see the SPY popping too. I've been talking about how the SPY has been playing games with these retail traders in the first couple hours of the market, and how later in the 12 to 1 p.m. and going especially into that 3 p.m. hour, you're seeing the change in the market. A lot of this is a pattern that we need to catch as retail traders so we don't get dumped on often. But as you guys can see, this is the pattern that we have been seeing recently. Let's get into the headlines, though. The show's not about my opinion. It's about getting to the headlines. So let's start diving on in. Today, we got a great show for you guys, talking about oil dropping, Jolts, ISM, Voyager, Rivian, Carvana. There's a lot going on. We're going to go ahead and start diving on in. But like always, guys, smash the like, and let's keep things going. First things first, today we are seeing oil stocks continue on the downside. We'll go ahead and take a look at those in a little bit and what's hot and what's not. But I think it's the important part is taking a look also what happens with this kind of game that we keep playing here. Is growth back? Our value trades keep falling off the table. We need to keep an eye out because a lot of traders are trying to call the bottom, and we're here just trying to see where the process is leaning to. Are we continuing leaning towards a recession? Are we leaning out of this? Is inflation peaking? I know it's on a lot of investors' minds. Now let's first get into the job openings here. So job openings total here, job openings 11.25 million in May. A considerable drop from the upward revised 11.68 million in April. According to the Labor Department Jolts report, there were 5.95 million people counted as unemployed in the month, meaning that there were 1.9 openings per every available worker. This is still around historical highs. So, one of the things that keeps being mentioned, of course, right, is GDP, right? And are we going into a recession? What is technically a recession, or what really is defined by recession? A lot of that is we're looking at the jobs number. We're kind of keep watch on what happens. This stories like this show us that we're not in a recession right now, still around historical highs. But we're going to keep watching here as the job openings. There's job openings out there. Job number hasn't really ticked up big. And so I think that's why a lot of people are fighting on, are we in a recession or are we not? Layoffs nudged higher during the month to 1.39 million after hitting a serious low in April from data going back to December 2000. So what are you seeing here? That the layoffs are starting to go up. That's one thing that we've seen, right? Certain companies mentioning how they're going to have to adjust in this environment to start doing some more layoffs, of course, focusing on their costs and trying to address that. I think we could possibly see the layoffs continue, but of course, we won't know until it hits the tape. Federal Reserve officials like to watch the Jolts report to show if there's signs of weakening out there in the jobs. We also got ISM Services Index here reading a 55.3 reading, anything higher than 50 giving us expansion. So indicating that a percentage of firms are still seeing expansion. This was better than the 54 estimate given by Dow Jones. So this is also better than kind of what we've been seeing out there, but it is a slowdown from the 55.9 number that we got in May. Let's go ahead. Let's take a look at the overall market, see what we're seeing on out there, and if we can get some strength into this market. It's just been a lot of chop, a lot of chop. This is the reason why I've been watching more and more the hourly charts, as you're seeing kind of that up and down moves, trying to get away from the fake outs, because this market will show you a lot of fake outs on out there. Let's get going with the news out there. Of course, we've been seeing energy just completely getting hit. Basic materials, those are the two sectors that are down the biggest from the open. Also, you got consumer cyclicals now down 1.43. So those are the threes that are definitely pointing back. If you take a look at overall performance, consumer cyclicals year over year is the worst sector. And then from there, we've been seeing the basic materials and energy really just pull off, right? A lot of people first saw the basic materials kind of sell off. If you take a look at the daily, you can see here how much we've really just came off from those highs. And then energy also doing the same, continuing the pullback there. XOM down 3% today. Stocks like Chevron down 2%. And Oxy's the only one that's slightly in the green. We all know what that's probably come. Warren Buffett, he hangs on to some good quality names. So you guys are seeing Oxy hold up a little bit more relative to some of the other names. All right, like always, one of the things we want to do is point towards the headline. Let's go towards our crypto headline today. It's a tough thing to find out, but if you had Voyager Digital or USDC, it's not what you wanted to hear today. Crypto brokerage here letting us know that Voyager Digital filing for bankruptcy here. Not what you wanted to see, of course. We're going to go ahead and talk about that. But they do have filing assets between 1 billion to 10 billion and liabilities in the same range. The company said it had 1.3 billion of crypto on its platform and holds 300 million in cash. Statements by the CEO here. We strongly believe in the future of the industry, but the prolonged volatility in the crypto markets and the default in Three Arrows Capital required us to take this decisive action. Voyager CEO Stefan Ehrlich here. And we're going to keep watch to see what happens, because crypto lending platforms like Celsius, Anchor, Voyager Digital are just the beginning of what we're seeing out there with the cash being trapped, right? We've been talking about the red flags that have been being put up, and it seems like the writing is really on the wall now for crypto. Definitely into that winter kind of season. And we've talked about the seasonality and how a lot of times it's just played in a 4-year wave, and we're definitely seeing the turnaround in crypto. So we're just going to have to keep watch as we're seeing a lot of these tokens take huge drops, which is causing these platforms to temporarily suspend or limit withdrawals. So this is another thing that we've been talking about here. When you see the red flags, sometimes it's better to kind of be quick to the protective side than be focusing on just staying in there in the risk. We talked about the potential risk of these platforms. I just hope that not all of us got caught in this. I'm sure some of us did. But one thing to keep in mind is always when you're in high risk assets, understand how much you're really, truly willing to lose. And are you playing with money that you're truly able to lose and it's not going to be detrimental to your lifestyle? Let's continue moving through here. There's a lot of topic on out there from the crypto industry about what's going on with this. We'll keep talking about it, but I think, our next interview is going to be pretty interesting to talk about. This is someone that has over 50 years of experience, and I think that's an important thing to kind of note. And in times like this, when we're seeing a lot of changing in the environments, I think it's always great to get to the experts. So I'm super excited to get into our first interview of the day. Let me know if you guys are excited as I am. We're going to bring on Peter Tanis, founder and chairman of Lynx Investment Advisory, in a second here. We're going to play a little trailer and then bring him on. And I'm excited to talk about it because we're going to do a little bit more of a deep dive for investors out there. So stay tuned, hit the thumbs on up, and let's keep going here on Stock Market Movers. If I can find the trailer here. There it is.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, let's go ahead. Let's bring on Peter Tanis here, founder and chairman of Lynx Investment Advisory. Welcome to the show, sir.
Thanks, Mitch. Pleasure to be with you.
Yeah, it's definitely a pleasure for me to have you on this show. Someone that has so much experience in the industry, has been through the waves, as I like to call them, because there's definitely waves in the market. It's not just straight up, right? And I think that a person like yourself has the experience that we're all looking for. So let's first, I want to recognize that you have been on point with your opinion on interest rates. I remember early in January, there's an article that was put out about the interest rate comet, as you referred to it, was about to slam the U.S. economy. And it did, that for sure. Now I'd like to know, how do you feel about the Fed now? And where do you see interest rates kind of?
Right. The Fed interest rates have gone up as predicted. And by the way, as an aside, the article you're referring to, I was talking about the effect of the higher interest rates on the national debt. Soon, our interest costs are going to cost us more than what we take in personal income taxes. So that's to worry about. Right now, the Fed is on target. The 75 basis point increase was the right thing to do, and it's already having an effect. What was the big fear back, a few months ago before the market started to tank? Inflation. Well, inflation is abating. As you pointed out just so well a few minutes ago, commodity prices, gasoline prices are going down. So we're moving in the right direction.
Okay, so I did have a question on inflation. I was wondering if you saw a period of sustained inflation showing up here. We have been seeing a little bit of a pullback, energy, commodities, but do you think inflation's here to stay, or do you think it's kind of just the moment that we were going through in this cycle?
Yeah, jury's still out, but I lived through the inflation in the 70s, when the prime, when the Treasury, I had a client who came in with a 30-year Treasury at 14%, with a coupon of 14%. I lived through that. My answer is, I don't think that's where we're going. I think we will have this under control in a much more sensible manner. And I think the outlook for the economy is going to be a slowdown for sure. As you were mentioning earlier, maybe there'll be a technical definition of a recession, maybe not. But in any event, we're not going back to the 70s.
I'm glad about that. I don't think that's going to happen. And I think a lot of people were worried that we were heading into those times, right? Now, one thing that I wanted to talk to you about, and you've written plenty of books, so I think this is a great question to talk about here, is should individuals pick and choose stocks to buy?
Oh, I'm glad you asked that, because I talk about that in almost every one of my books. I say individuals should not buy stocks. And let me ask you a question. Let me ask you why.
Yeah.
Let me tell you why. If you tell me you want to pick stocks and you're listening to CNBC and you're reading the magazines and they're recommending stocks, my question to you is, tell me how much time a day you're going to spend on this exercise. And my guess is that, first of all, you have a job, you're smart, but how much time a day are you going to spend on this? If you're really devoted, a half an hour or 45 minutes? Now, if that's the case, explain to me how you're going to do better than a professional who spends 8 hours a day doing the same thing.
That is true, right? And I think you definitely have some insight there. A lot of traders on out there, they think they know a stock because they maybe watch it for about 30 minutes of the market intraday. But there's a completely other story of actually doing the deep dive in the financials, understanding where the business strategy is heading to, and really what the outlook really is.
Yeah,
So let us know a little bit more about that, Peter.
yeah, let the professional pick the stocks for you. He's going to spend 8 hours a day doing it. You're not. Plus the fact that if you buy a stock, you're going to have to keep track to make sure that that nothing bad has happened in the meantime.
Now, one of the things that we're seeing is a recent downturn, right? Now, where do you see this downturn kind of turning around? And what could people look for in a time like this for maybe safety or investments opportunity?
Yeah. I hate to make market predictions because chances are you're going to be wrong all the time.
That's
But I
true.
think it's starting to smell close to a bottom. It's starting to smell like one, but that's not a prediction. I have just as much chance of being wrong as anybody else. What I have been doing, what I recommend doing now, is to look for new investments in high dividend, high income type investments, preferably you can look at master limited partnerships, you can look at dividend funds that, again, are professionally managed by people who know and understand the risks of the companies that they're investing in. But you can capture yields today of 5, 6, 7, 8% in a variety of different funds and investments and partnerships that are readily available.
Well, we sure could have used some of that talk maybe earlier on this year, Peter. I'm sure a lot of people were like, man, I should have been pounding the table a little bit more on those income stocks and that strategy out there. Now, in your book, Investment Gurus, you interviewed stars, top Wall Street money managers, Nobel Peace Prize winning economists. Is there any patterns that you saw here with traders and investors that have had success in the past?
Now, it really is a question of understanding and sticking to what you know and what you're after. For example, several of the people I interviewed, Peter Lynch in particular, I mean, he was dogged in following the companies that he bought, and he had the best record of any mutual fund manager. It'll never be beaten. He was up like 29% for 13 years. That record will never be equal. But it's a question of sticking to it. And again, remember, we're talking about professional investors, not amateurs.
Yeah, definitely, with a defined processed approach, right? I mean, that's what we're looking at. And one thing that happens there, I always say, it's not your luck that brings you back into the profits. It's normally your system that brings you back into the profits.
Well said. That's
definitely, it's the way that I've seen it, and the data doesn't lie, right? Now, let's talk about your latest book here, the Pure Equity Plus Plan. Let us know what is in this book and why we should be going after it. There it is right there, guys. Check it out.
This book is the culmination of over 50 years experience in the market. And it basically says it's a very simple plan involving two types of index funds and a little gold, where if you start early enough, history shows it has the best chance of leaving you with a multi-million-dollar retirement nest egg by doing practically nothing. I cite in the book an example that Warren Buffett did in an interview with Becky Quick on CNBC a few years ago. He said, I bought my first stock in 1942. He said, the war wasn't even over yet. We didn't know who was going to win the war. We didn't know about the Federal Reserve. We didn't know about 9/11. We didn't know anything. Had you put $10,000 in the market in 1942, when I bought my first stock, said Warren Buffett, how much do you think it'd be worth today with your having done nothing since the day you bought the stock? And so he paused for a while, and then he gave the answer. That $10,000 would be worth $52 million today.
That just goes to show you, right? There's always that line, right? It's not timing the market, it's time in the market that
Well said.
matters.
Bravo.
Definitely. I've seen it. That's one thing that even myself, I'm still young, and I still think, man, I wish I would have started earlier and earlier. And that's great for our viewers out there that are in a time right now where, yes, you could be seeing stocks come down, but I think this is a great opportunity if you have a real long-term horizon to really look forward to getting stocks on the cheap, right? I've had someone on here, Peter, and I wonder what you think about this quote. And the stock market's the only place that when you see something go on sale, people try to run away from it instead of running to it. Do you feel that too? I mean, is this a opportune moment for us long term?
It is an opportune, but it's human nature. We get more fear out of the decline than we get pleasure out of the rise, and that plays on us. But yes, this is why if you have a systematic program of investing every month in the formula in my book, for example, and then don't pay attention to it. Some advisors say, check your portfolio every month. I say check your portfolio almost never. Just keep investing this way, and you'll have the Warren Buffett effect that we just talked about.
Hey, well, thank you for coming on here. Peter Tanis, founder and chairman of Lynx Investment Advisory, and definitely check out the book. I'm going to actually put a link directly to the book on Amazon. It's one of the top reads on Amazon right now, so definitely check that out, guys, the Pure Equity Plus plan. And thank you for coming on. Appreciate it, Peter.
I just want to say you do a terrific job and a great public service. Thank you.
Thank you. Really, truly appreciate it, Peter. All right, guys, let's keep on going. That's what this show's about on Stock Market Movers, is getting to the experts so that you guys can stay in the informational edge. I hope that you guys reach out and talk a little bit more to Peter. I think he's an awesome guy to have on. We need to bring him back on because I love having the experience. That's truly what I wanted to do this show for, is I wanted people to come on more often that have that true experience in the game, have been around through the market waves, and can help us stay in the edge. All right, let's keep going. We got a lot of headlines to get to, so I hope that you guys enjoyed that. Smash the thumbs on up. Let me know in the chat, what do you guys think of that guest? We're going to go ahead and continue going. If you guys have a headline that catches you, maybe by surprise or something you want to talk about it, feel free to chat in the comments. I definitely can see these, and I'll go ahead and I'll try to address them when possible. All right, let's keep going. Let's get into the next headline. I want to talk about what's going on right now in Toyota and the situation, kind of what's happening here. So Toyota here, getting to the point, TM, let me go ahead and put up the chart here. There it is. Let's put up the chart. All right, so TM, Toyota Motors here, said it sold its 200,000th plug-in electric vehicle during the second quarter, triggering a phase out of the U.S. tax credits that up to $7,500 for people who buy cars. The Chinese automaker joins Tesla and General Motors in initiating a phase out of the credit for future consumers who purchase an all-electric vehicle or plug-in hybrid electric vehicle. I think this is truly important because one thing that we have seen is there was a headline a little bit back that these companies were going towards Biden and kind of the administration right now asking to get what? Get more of these tax credits, right? It could be for companies like Tesla and General Motors and Toyota now to kind of continue on with their credit, or it could be to get more money for the other automakers, right? I think this is something that we need to keep our eyes on because kind of the long-term environment of EV is definitely pointing towards the upside. When are these cars really going to kick in? And are we even going to have credits when it comes down to it? Because these vehicles are super expensive. I mean, a majority of your kind of full electric are going to be way over that 30,000 mark. So we need to kind of keep an eye out to see if these credits will help transition the consumer, because that's what I think needs to happen to get some stickiness in the consumer and them continuing to buy and moving out of the gas powered vehicles into electric powered. Now, we also got other news here in, of course, EV. Let's talk about Rivian here. So sorry, I'm taking a second. I'm trying to get the headline for you here. Let's still take a look at Rivian. How's it performing today? I did see it boosting on up there. It was up about 10% earlier in the day. Let's take a look at how it's trading now. All right, so this is trading pretty well there. It kind of held the gains. You see it pushing up there towards 30. Let's take a look at the daily chart. You can see a lot of bottoming around here on the bottom of this. So around, let's say, the 25 mark. Around that 25 mark, there's a lot of bottoming action now, at least that a level to maybe go off of. Another thing to keep on mind is the volume, right? And you've been seeing that when we went down here, we had a lot of volume coming on in during this drop. And now we're starting to get and hold those prices on the pullback. I think we're going to start seeing a push off of those, and you've seen investors in there in the 22s and 23s. We'll see if this can get back there towards, let's say, 40 or 50, but definitely seeing some bottoming action on this Rivian chart. We're going to keep on watch. Rivian did confirm that it's on track to build 25,000 vehicles in 2022, in line with the lowered guidance it issued in March. In March, it cut down its, it was at, let me just be on point here. It had said 50,000 and it cut down it to 25,000. And then you're seeing them in line with that. But we also have seen more issues, right, with vehicles, right? Ford was talking about how some of their cars were made without some components. So I'm a little bit concerned about if they're going to be able to keep on track in 2022. But Rivian, for now, showing a little bit of upside coming on in here. All right, let's get towards the Dash. Let's take a look at Dash today. Definitely getting a little bit of a push on up here. And let's talk a little bit about that. So Amazon coming on in here and letting us know that they will acquire warrants that work out to a 2% stake in Grubhub, and can acquire warrants representing an additional 13% stake if certain performance obligations pertaining to customer acquisitions are met. So Dash taking a hit off of that. Let's take a look here. In the pre-market, it was down big here. It's gone about sideways from the open here. So we'll keep this on watch for sure. But as you guys can see, definitely fighting to kind of keep some of the gains that you had on the last couple of days. You had a little bounce. Now you're seeing that kind of deteriorate with this news. And you never want to see Amazon stepping up too much in your area, because that's an easy way to see competition kind of come on in here. Now we're seeing the market kind of push a little bit Amazon on up there. Is the market finally getting out of that hourly range? Looks like we're still in that hourly range, a little sideways, but eventually could get on out of there. So keep this on watch. DoorDash news here, definitely dropping with the reports of Amazon stake in Grubhub. All right, let's continue in here, guys. Let me know what you guys see in the chat. What are you guys focusing on? There are no new Toyotas here in North Carolina. Yeah, that could be something that you see out there, Melanie. Good to know. I might have to call Toyota dealerships to kind of check in on that, Melanie, but I like the included information. Smash the like Bourne says. Appreciate you guys. If you guys can hit the like, if you guys enjoy this show, covering all the headlines, getting to the expert opinions, that's what this show is about. Let me know by hitting that thumbs on up if you guys appreciate getting to everything in a 1 hour period. That's what I try to do here. So let's keep going. All right, let's go towards the next headline here. We're going to get into Microsoft's $69 billion acquisition takeover facing competition probe in the UK. So keep this on your radar, right? Let's see how Activision is reacting with this. You guys can take a look at this. ATVI, let's see how it's trading right now. It did pull back on the day. It looks like it's not trading too much down on this news. I think everyone was expecting this to get challenged a little bit here. So definitely investors kind of just kicking this headline to the side. As you see, Activision trying to hold these gains. Look at the daily chart. We're running into a longer term trend line. Now starting to hold above it. Would love to see it close back there by 79 today if you're a bull in Activision. All right, let's go towards the next stock we're going to talk about is Carvana. Carvana's lockup period coming into play today. We'll take a look how the stock traded here. Definitely was making a big move on up the other day here. So let's go ahead and take a look there at Carvana at CVNA. Let's go take a look there. How's it trading today? It looks like it came on down a little bit here. Yeah, definitely seeing some leak. It tried to hold, tried to break back up out, but couldn't hold that gain. Now kind of coming on down here. We'll watch how Activision continues as their secondary kind of coming into play here. Their lockup, 10.23 million shares expiring today on July 6th. So keep your eyes out. This could fall down here, or you could maybe possibly see a squeeze towards the close. So I think it's going to be moving, even though you had some sideways action. We'll see what happens towards the close here on Carvana. Of course, guys, coming up at 2 p.m., stay tuned for the FOMC minutes. When that gets released, the market could shake up here. And so, of course, what's going to be released is, of course, the June meeting, what was talked about with the Fed. I think one thing to keep an eye out is asset sell-off. I've talked about this so much. It hasn't been the interest rate news that when that hits the tape, the market has moved. It's been more and more talk about the asset sell-off. That, at least for me, has more attention of this market. Because why? Because a lot of this is kind of giving more in the minutes here from the meeting, and not spoken so much about. Everybody talks about interest rates, but not everybody talks about the asset sell-off, which is so important. All right, let's continue going here. Let's talk about Netflix. Netflix dropping here a little bit there on Barclay here, stepping on in and slashing their price target for the streaming service to 170 from 275. So let's take a look here at Netflix and see how it's performing on the day here. Netflix getting back there. It's trying to get back to the open. It was down today. It had a price target now of 170 from 275. I mean, that's a big drop there. So it shows me a little bit more how the analysts have been completely off on Netflix. So a little part of me, I'm like, I don't know if I should pay attention to you guys on this kind of call, but they're anticipating continued subscriber loss in the second quarter and increased competition. And so watch out, because that would also mean probably increased competition for Disney, right? And Disney Plus. So I think you keep these on your radar. We'll see if these kind of really start pushing. But for right now, they have been on the decline, and we'll see if the trend changes. Also, housing news coming out, right? We got the average contract, a 30-year fixed mortgage rate confirming loan balances of $647,200 or less fell to 5.74% from 5.84. Those concerns showed up in applications also of refinancing, which dropped 8% this week, and we're down 78% year over year. Another thing that is important is the home purchase applications, right? How are those going? Well, right now it fell this week, down 4% and down 17% year over year. So definitely we're seeing the purchase applications slow down a little bit. A lot of this due with what? The Fed environment and the raising interest rates. According to Mortgage Bankers Association, the average home price now loan is at $405,200, which is down from $413,500 a week that ended in June 24. So kind of that downward slope there on the home purchase loan shows that we're finally starting to see some of these home prices come on down. We need to watch this. How's this going to continue, right? How's the supply going to continue to grow? This is going to help grow the supply, but if you take a look at the numbers, there's still a glut in supply out there, especially even compared to 2019. You'll see some numbers out there that it will blow your mind on the supply that's really available. So we're going to look to see how big that supply grows and how fast, because I think that's what you watch. Housing lags a lot of the economy. I think now is when we're seeing the effects show up in the housing market, which comes after the market dropped, right? The same thing kind of happened in the financial crisis. I'm not saying that that's going to happen again, but we need to keep a watch what happens there in the lending situation. How's the capital? How's the credit card situation? Keep that on your radar. All right, in a second, we'll be getting into our interview with none other than Ivan Feinseth. We've talked to him before. Excited to get into that. We'll talk about the Fed, inflation, sectors, and we'll cover a couple of stocks. I want to ask him about GM. I want to ask him about Ford, Tesla. We'll talk a little bit about what's going on in Apple, if he sees it good. And of course, we'll also talk about some infrastructure talk. So stick around. Give me a thumbs on up. Let's keep going. If you guys got a stock that you guys want to check it on out or talk, throw it up in the chat. I'm going to definitely keep on going here. All right. Boren telling me that I'm right. I'm dead right to watch it. Don't think that you're the only one seeing a meltdown. I think it's something that we got to keep an eye out because, of course, I'm not saying that we're going into another financial crisis, but the biggest thing is that it takes some time to show up, right? And so keep your eyes on the housing market. You could see inflation even coming down, yet bigger problems showing up in the housing market. We'll see what happens there. All right, I'm seeing LMT mentioned in the chat. Don't mind. I'll take a look at that. Let's take a look here. All right, let's go to Lockheed Martin defensive stock. Let's see how this has been performing lately. You can take a look at the daily. You can see that sideways action. Let me go ahead and delete some of these lines. Let's actually delete everything here. See what we're seeing here. Let's go to a weekly chart. Daily looks a little bit choppy there in the last couple of days. It's because of that down gap that you see there. But yeah, if you draw a trend line here, you can see LMT kind of pulling on back here. It tried to come back here and hold the support. We're looking for this to kind of really start coming on back here through the 420s, getting on it up here. Where I really want to see it get back there is last week's high, which was 434. Let's look at the daily now, how we're seeing that high. That's right up here. We need to get it back into that zone if you're really going to start seeing that lift. We'll kind of keep this on watch. You know, this has done 1, 2, 3 attempts to kind of break out above the 450. If it can get back there, it'll be looking interesting for it to kind of push off. One thing that does help it is when it cracked down here through the support, you saw a big volume. So that could have been a big buy volume that came in here, but definitely you're seeing it hold that pullback to that level. On yesterday, we got a pullback to 407.21s. So I would look for that kind of those lows right here to kind of hold. You got a low here, 407.18. You got a low of 407.21. Look for that 407 to hold now as you're looking for it to come back up through the 450 area. That's LMT, Lockheed Martin. We'll keep a watch. We'll see what happens there. Like always, I got you, Dustin. I'll definitely cover any stock that you guys want to check it on out, and we'll see what happens in this situation. Of course, what to keep on watch in the overall market. We did see technology take a bounce yesterday. How's technology doing today? You can see it's down, but how are the big boys? How's our big components, right? Apple hanging on here today on the daily. It's still not into the red. I'm going to show the hourly chart here. You can see how it's just hanging on right now. Microsoft doing the same. Google doing the same right now. Even Meta up decent, right? And that one's actually holding up towards the top of the range there. You could take a look at some of these. Let's see how Tesla's doing. It's starting to get back there. It's trying. You can see a lot of sideways action today. Let's take a look at the SPY here. You can see some more sideways action. Still hasn't really broken up or down out of the range. I've been seeing so many fake outs on here. But one thing that is looking for more of the bullish is seeing those components just kind of holding, and not breaking down. Eventually, if it comes with a rally in the market, we could probably see those components tick on up today. We'll keep watch on technology. I also have been watching healthcare. What is the area to watch in there? It's been biotechs for me. This has been big moves lately in biotechs. We'll see if it can continue. It's pulled back today some. You can see by some of these kind of into the red here, but it could catch a bid. Moderna continuing the strength. This is what's gotten me also interested. Look at the last 3 days here for Moderna, getting on up there through the 146.30s, now up there to 159 and looking to continue pushing back here. So we could find these kind of just lagging a little bit and some of the main leaders taking off. All right, that's going to do it for the look out there. If you guys want to check it on out, we'll see what happened there. What is driving oil lower? So I think this has to do with a little bit of an outlook on the demand destruction. I don't think it's necessarily happened just yet. but this is the outlook. Another thing that's been, of course, is what's going to happen in the next couple of months in the Russian situation. Because, of course, all of a sudden you hear, this situation go away, boom, complete destruction probably we would get of oil. So another thing that could happen, though, is some more strong handing by Russia, right? Of course, coming on in and saying, you know what? We're going to continue battling here with our 5 million barrels, and we're going to take them completely off the market and see what happens there, and put pressure on other kind of economies. And of course, put pressure on what? Put pressures on those sanctions that are put on Russia right now. So we'll see what happens here. I think that's the only way that you see this come ramping back. But another thing, of course, here is to keep on watch and be flexible. Because yes, I myself was looking for a bounce in oil. I tried to catch it, took a trade, got stopped out, took a trade, got maybe first reward, stopped out. After a certain amount of time, you realize that you're fighting the tape. That's probably what we don't want to do. Ned Davis, if you guys don't know who he is, look him up. He's always said, don't fight the Fed, don't fight the tape. And it looks like right here, a lot of people are trying to fight the tape a little bit in the oil industry. And this is why you got to kind of look ahead as the market looks ahead also. Like always, nobody knows really what's going to happen in the Russian situation. Probably the only person is probably Putin himself. But one thing that we're going to do is kind of continue to focus on if we see that change. And of course, if we get some new news out of what's going on in the situation in Ukraine and Russia. All right, let's go ahead. Let's get out of that situation. Appreciate the tip there, Andy Lee. Thanks, man. You want to take a look at JD Yumc? I'll talk about it. I have no problem. It did get hammered today, those Chinese names. I'll get into that right after our interview. All right, coming up, let's get into our interview, our second one today. We had earlier on Peter Tanis. Now we're going to go ahead and get to Ivan Feinseth, analyst at Tigress Financial Research. Smash the thumbs on up. Let's go ahead. Let's dive on into that. I'm going to play a little Benzinga Pro trailer, and then we'll go ahead and dive right on in. Actually, let's play a little content here.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
All right, traders, let's go ahead, smash that thumbs on up and give a warm welcome here for Ivan Feinseth, analyst at Tigress Financial. How you doing today, Ivan?
I'm doing good. I'm happy to be on and part of the community.
Yes, exactly. That's what it's about here. One thing that we clearly see this week is that we're starting to finally get more of the battle between value and growth, right? How do you see this right now? And are you seeing more of kind of growth starting to take back the lead?
Yes, because I think over long periods of time, growth always wins and growth always leads. And especially a lot of the traditional growth names, while now they may have become more value plays with the decline in price and the decline in multiple, but I think the growth plays like Apple and Google and Facebook and Nvidia and all these industry leading names are incredible buys here, and at some point will resume their upward trend and lead the market higher once again.
All right. Now, one of the things I'm seeing is energy and commodities, right? Starting to show a little weakness. What do you think here? Has inflation peaked?
Well, there are some data points, including the recent multiple data points from PC personal consumption expenditures that is showing a peak in inflation. And I am always happy to see both personally and professionally lower oil prices. I think the biggest potential drag on the economy is high gas prices. It really hurts consumers' discretionary spending ability and really puts an overall, dark cloud on the economy. So lower oil prices is always, and lower gas prices are always welcome. And this pullback in commodities, again, we've seen input costs of commodities, whether it's copper or other types of or steel or aluminum, we always want lower input prices. And then, of course, oil affects shipping and transportation costs. So oil is an input or a price input to almost everything. So lower commodity prices to me is very positive. And maybe the Fed will not have to be as aggressive as people think. I don't think that we're going to see 3.5 to or higher on the Fed funds rate. I don't think we get even close to 3%. We're probably going to get a 75 basis point increase at the end of the month, even though it's kind of leaning more to a 50 basis point, but maybe one more 75, take the Fed funds rate to 250, and then the shock to the system may have already started to work, the anticipation of that. And we get this back and forth between higher rates, higher inflation, and a fear of recession. And I think that the economy is strong. You can't have a recession with a 3.6% unemployment rate. Yeah. Even with interest rates where they are now and the big jump in mortgage rates, which have, caused a big slowdown in home prices. I think, though, other sectors, the travel sector has remained strong. We saw a lot of travel during July 4th when that was going to be the test of the economy and the strength of the consumer. So the consumer remains strong. Consumer has over $2 trillion in excess savings. The consumer has lower credit card balances than they did before the pandemic. So the consumer is in great shape. Corporate balance sheets are in great shape. We have seen multiple companies announce new share repurchase authorizations and dividend increase. You saw Caterpillar, JP Morgan, Goldman Sachs, FedEx, all announced significant dividend increases based on a positive outlook on cash flow and their business. So I think these are all underlying positive trends. And I think they are starting to help put a floor under this recent sell-off that we saw over the past 6 months. The other important thing is that, and everybody says that it's the worst 6 months since 1970, going back over 50 years. So in 1970, the S&P was down 20.6%. Subsequently, it was up 26% the subsequent 6 months to close higher for the year. Every time.
I agree with you on that amazing stat, right? I think that's an amazing stat.
It gets even better because every time the S&P 500 has declined more than 15% in the first 6 months, it has been up on average 24% in the subsequent 6 months. So history is on the side of the bulls.
Yeah, definitely. And we'll see what happens here. Now, one of the things that I'm looking for is trying to find, right, some relative strength, right? Sometimes sectors and industries are going to lead here. So where do you see kind of the industries right now? Is there any strength in sectors or industry that you want to keep your eyes on for?
Tech has gotten pounded the hardest. I think it's still the biggest growth driver of the economy and of the stock market. And we saw yesterday's recovery was led by the recovery in the NASDAQ, which is led by the recovery in tech stocks. We saw a great turnaround. And I think seeing some of these turnarounds and where the strength is yesterday was in tech and consumer discretion. So even though the travel stocks, including the cruise stocks, have just been relentlessly pounded, the cruise industry is actually doing much better than the stock prices are reflecting. So I think there's opportunity there. There's a lot of opportunity, I think, in a lot of the leading tech and consumer names.
One thing that I'm watching now is, let's go into specifics here. Let's talk a little bit more about recently been seeing GM and Ford talk about different kind of supply constraints or materials, and kind of that Ford built some vehicles and didn't have some certain components. What do you see next here for the legacy automakers?
Well, GM and Ford continue to evolve and move forward to develop electric vehicles, autonomous technology. They're investing in charging infrastructure. I think the two best plays on EV is going to be Ford and GM, as well as, Tesla is going to maintain its lead for some time. And I also like Rivian. Rivian had some positive news out today, positive delivery numbers, and still on target for their 25,000 full year 2022 production. And pickup trucks, and SUVs in general are the sweet spot of the car market. And Rivian is probably one of the best pickup plays, followed by Ford. GM's electric Silverado is not going to be out until next year, so they do have a little bit of an advantage. So they've already started to deliver the F-150 Lightning, and Rivian delivered, I don't have the exact number in front of me, over 4,000 pickups in this second quarter.
One area that I'm watching, of course, is Tesla's recent decline. So I have to ask you a question. I think you might kick it to the waters here, but do you think Elon would ever consider leaving Tesla to work on another project like Twitter?
I don't think he would leave Tesla to work on other projects, and I think he has an incredible management bench at Tesla, and would build an incredible management bench at Twitter. So I think he could do well overseeing both. Certainly, he seems to be able to manage a lot and keep a lot of balls in the air and keep his eye on all the balls. So because he's also has several other companies that support what Tesla does and continues to do well. So I like Tesla because I like the car, the company, and its CEO. The stock has been a hard stock because of the valuation and the volatility, but I've always said if you can stomach the valuation and the volatility, the benefit of the doubt in Tesla stock goes to the upside.
Now, recently, we've been seeing Apple really fall off its highs there. Is this kind of more of a generational moment here to get an opportunity like a monster brand like Apple?
Absolutely. Anytime Apple has been weak, it's been a buying opportunity. Every time they come out with a new product, it sells more than the product. The iPhone 13 sold more than the 12, more than the 11, and so on and so on. There's already talk of great upgrades to the iPhone 14, and with every product that Apple sells, it expands their ecosystem and expands their services revenue. And the revenue in services, the growth in services revenue continues to be incredible, and it adds the services revenue is highly profitable and it adds a lot to the bottom line. Plus, Apple still has a massive amount of cash that they continue to invest in dividend increases and share repurchases, as well as R&D and product development and marketing. So they are just a cash machine.
Another area where I've been watching is infrastructure, right? We've had that infrastructure bill, but we really haven't seen kind of more of that infrastructure trade come in. Are you taking a look later in the year, or is infrastructure
a run up in Caterpillar that was probably primarily driven by energy and mining? But yet, Caterpillar is the number one infrastructure play. Yeah. And then let's say aluminum through Alcoa, and then also Deere through construction and farming. So it's interesting that Caterpillar ran up because of the strength in oil and the strength in industrial commodities and mining growth will continue to grow for some time. As I said, in May, they announced a $15 billion additional share repurchase and a dividend increase. So the company also continues to produce significant cash and cash flow and invests it in growth of the company, as well as returning cash to shareholders.
Definitely something to keep a watch on. Thank you for joining us today. Ivan Feinseth, analyst at Tigress Financial Research. Definitely check him on out and find him on Twitter. Give him a follow, guys, and definitely a thumbs on up. Appreciate it, Ivan.
See you, Mitch.
We'll have you back on. Thank you. Like always, that's what this show's about on Stock Market Movers, to get towards the experts. You guys see him there. I think Ivan's truly bullish there on the travel industry. He's seeing it. What he's seeing is not representing in the price action. I think that's something that we've also been watching here. We've been seeing that price action point down there in kind of like cruise lines, Hilton, those kind of names. But also what have we been seeing is the numbers actually showing upside. So it's interesting to definitely keep on watch. Another thing, of course, to kind of watch is how we develop in tech, right? Are we going to have tech lead us back, right? Another thing also mentioned is growth. I think growth is something that you want to have in your portfolio, but also it not be the complete portfolio. I think this recent time is a clear example of why we want to kind of diversify and not just be in growth, but something to keep on watch. All right, let's go ahead. Let's continue going here. If you guys got a stock, you guys want to check it on out, let me know. We got about a minute here. Nope, it already hit 2 p.m. there, guys. The minutes are going to be putting on out. Let me take a quick look at the SPY here. See how the SPY is reacting to those minutes. I talked about how important this is. Look at this reaction we're having right now. It's starting to move here. Let's look at that. Now we're starting to get there towards a high there. Can we get out of the range? I've been talking about, do we crack below 380s or do we crack above 383s on the SPY? That's what I'm watching here. I'm going to keep watching this as we get in kind of the number to really come out. I'm trying to take a look at if there's anything out for us to kind of take a quick assessment of the minutes. I will be deep diving into this, guys, so stay tuned on At the Close. I'll do my best to try to pull particular quotes out of the minutes here. But like always, smash the thumbs on up if you guys appreciated today's show, getting the 2 experts and hitting the headlines like always. Give me a thumbs on up. Let me know in the comments after how I can make the show better. I'm here for you guys. I'm trying to make this show the best show out there right now, and only you guys can help me by providing some feedback. We'll see you guys tomorrow. Let's keep battling in the markets. Up next, you guys will be getting a replay of the roadmap, so definitely hit the like on that. Let's go ahead. We're going to wrap on up, and I'll see you guys like always right here on Stock Market Movers. Let's keep battling in the day and see what the end of the day brings us. I'll see you guys on At the Close. I will let you know I will be by myself on At the Close. Joel Elconin is going to be out for the rest of the week on At the Close, so stay tuned for a lot of analysis from Money Mitch, and I'll see you guys in just about an hour and a half. Not too bad. Let's go ahead and find out what happened in those minutes.